Hey everyone, it's Daniel here from etfs. Hope you're all doing well. So let's talk about Germany. Germany is facing a couple of issues here, right? We've got an article that comes out from Bloomberg talking about the labor problems in Germany and how that's going to really make things worse in terms of inflation and in terms of also growth for Germany. Now, a year back, I did a video talking about how Germany's yield curve is in crazy inverted territory levels. It is so inverted that we haven't even seen these type of levels after X amount of years, or some of them even reaching all-time lows that has never gone to these inverted territory areas in the past. Now, this yield curve, when it inverts, it signals to you that, hey, there is stress in the economy that's going to come up. It's a signal of a recession and so on. And also with Germany having that ugly inverted yield curve and Germany being the engine of Europe, especially in the upcoming recession that's going to come, if Germany is going to be affected hard, then you can expect all of Europe is going to be massively affected, which makes you think, how is Europe going to come out of this recession that is coming up, or that we actually already are in? How are they going to deal with it if Germany, the engine, the soul, the heart, is going to be under a lot of pain in the coming months? Now, let's get into this article. I will scroll down a little bit here. I'll leave a link in the description for you to read up on it as well. But I'll scroll down a little bit here and start off with a couple paragraphs down saying, without a major shift, Germany's labor force will shrink dramatically in the coming years, undermining economic growth, boosting inflation pressures, and posing especially tough challenges to the manufacturing firms like Schuko that are the backbone of Europe's biggest economy, right? So if you've got the labor shortages, you've got the labor shrink happening, and there's less workers, less productivity, less goods coming out, and you need to buy certain things, but you can't because you don't have workers, that's going to push the prices higher, inflation higher, and demand is going to be weak and weaker. Now it goes on and says that over the next decade, the labor supply will shrink by 3 million people, or 7%, unless retiring Germans are replaced by a significant influx of migrants. And you're seeing that in a lot of countries, in other countries, like for example, take Canada as an example, increasing the population, bringing in immigrants to try to fix this upcoming issue, or this current issue, that a lot of the baby boomers are looking to retire, cash out their pension funds, their investments, and that's going to take them out of the labor market. And just like this article is talking about, 7%, that needs to be replaced somehow with either new people coming into the country, or the baby boomers are staying in and still working. Now, what could it be, right? One, you could argue that a lot of countries will start to open up the doors for immigration to bring in the population to solve this labor shortage. Second thing is, well, if this recession that's coming and expected to be a hard landing rather than a soft landing, if that affects a lot of baby boomers with their pensions, with their money, with their investments, and they can't cash out, or they cash out too late, then I think you're going to see a lot of these baby boomers not retiring at the expected age and staying in the labor market for some time, especially because they're going to be hurt in this hard landing if they don't exit out, or they don't have some sort of hedge or safety plan. Right? So going on further here in this article, it says, just to stay flat, the country needs 400,000 newcomers a year. While this figure has been reached at various points in the past, migration to Germany has been boosted by refugees coming from countries like Syria and Ukraine. And after the experience of those years, voters are skeptical and promises that migration can boost growth. That was the claim back in 2015, but only around half of the refugees who arrived during the wave have found work 5 years later. right? So, okay, fine, you can bring in all the immigration you want, right? Just like how Canada is doing, bringing all the immigration you want. Bringing in people, immigrating people, increase the population. But if those people are unable to find work because they lack the skill, what's the point? Now you got to pay for their living or unemployment or whatever the case may be because you brought them in, they've got no skills because you wanted to fill this labor supply shortage. So if that's the case, then they're getting jobs later on because they got to go upgrade, learn new skills, and then maybe later get hired. So just like this article is saying, since 2015, it wasn't really solving the issue here, and the problem seems to continue to persist. Now it also says here, Germany is worse off than any other Western peers, and it shows a graph there. It says that working age population in Germany actually peaked at the end of last century, but the country managed to stave off demographic decline for some time thanks to arrival of millions of immigrants and rising number of women going to work. So more women going to work, helping with the issue there. But both trends are now fading. Just as post-World War II, baby boomers are retiring. So again, does this hint towards what? If the current immigration that you've conducted in 2015, the inflow of people that is coming in is not solving the problem. If the boomers are expected to retire and not stay in the workforce, then how are you going to solve this problem? Well, one thing comes to mind. It's called AI. Now this could be the thing that comes out and takes your job and everyone's job and who knows, my job, and replace everyone else out there, and that might be the solution, right? So you might see that AI start to be pushed, and that as this recession comes in, to solve the problem with inflation, it might mean that you might have this technology advancement that whatever workers are there, you can now do it through AI, the same work that humans were doing, but at a more cost-efficient manner, and you can do it faster. So now you got productivity, growth, and inflation coming down because of AI. Now, what do all the other people do who lost their jobs? Well, we'll have to see. It'll probably either you're not going to do much, you're just going to get maybe a check from the government, and you're not going to own anything and be happy, according to some people. Or you might have to find new skills or utilize skills or learn a new skill or learn a new field where AI can't replace humans. So it'll be very interesting to see how that all plays out with the current AI, with this immigration, with the inflation and the upcoming recession, all mushed up into a ball, and it's looking like this is going to end kind of nasty. We'll see what happens. Leave a comment below, subscribe, hit the like button, bell icon to be notified on the next video, and I'll see you guys around. Cheers, bye.